Very warm welcome to our news show Commodity TV out of Munich after the 7-1 Germany beats Brazil yesterday evening, and Altona Mining has sensational news. Altona Mining sells the Finnish assets for $95 million to Boliden. Boliden is a Swedish-based metals miner and smelter which currently buys all of Altona's concentrate from Outokumpu. The company's core businesses are mining, exploration, smelting and metals recycling. Boliden has approximately 4,800 staff worldwide and an annual turnover of approximately 5.4 billion Australian dollars. Well, what are the terms of the transaction? Boliden will pay Altona $95 million for the assets plus approximately $5 million for adjustments for working capital and net capital expenditures during the settlement period. This equates to approximately 106 million Australian dollars. $10 million will be held in escrow account. The transaction requires approval from the Finnish Competition Authority and will also require approval from Altona Mining shareholders. After the transaction, it is forecast that Altona will have between 120 million to 125 million Australian dollars in cash after all costs. Subject to tax advice, the company should have sufficient tax losses to cover any tax liability arising from the transaction. What could be the benefits for shareholders of the transaction? The transaction will result in a cash payment to shareholders of approximately 15 cents per share, which is broadly equivalent to Altona's share price in the 3 months prior to the announcement. This equates to approximately 80 million Australian dollars in total to be returned to shareholders. Post-transaction, shareholders will still have holdings in a strong, simply structured company with the potential for significant returns either through a joint venture agreement or outright sale of the Little Eva project. Another way of looking at this is the current market cap of $88 million, and Altona has over $18 million in cash. The value implied by the market for the Finnish and Queensland assets is therefore only 70 million Australian dollars. Clearly, the $106 million realized for Finland alone crystallizes value and a premium of around 50% to the recent market price of Altona shares. How will the funds be returned to shareholders? Very important for the Australian ones also. The funds will primarily be in the form of a capital return with the possibility of a proportion being distributed as a dividend. The relative proportion of dividend to capital return will be determined following a ruling from the Australian Tax Office, and only when this has been clarified will Altona inform shareholders of the cash payment paid. It is expected that for most Australian taxpayers, the return of capital will be tax-free. Why will roughly $80 million be returned to shareholders? Well, Altona's primary objective is to deliver long-term shareholder value and reward their shareholders for standing by the company, particularly in those volatile times and markets. Following the transaction, the company will still have a healthy bank balance with $40 million to maybe $45 million in cash, no debt, and considerable upside for shareholders with potential to realize further value either through a joint venture or outright sale of the Little Eva project. It is also particularly attractive that for most Australian taxpayers a return of capital is free of tax. Altona concentrates now on the Australian assets and is a clear and focused company with the Little Eva project to move forward. The management has hopefully a plan in the pocket how to advance this project, as well the joint venture with Chinalco for the Southern Tenements. We keep you posted, guys. Enjoy the football. Bye bye from Munich.